This meeting is being recorded.
Ladies and gentlemen, I welcome you all to the FY23 post-earnings conference call of Spectrum Talent Management Limited. The company listed on 22nd June 2023, post which the FY23 results were declared, and subsequently we are holding the FY23 post-earnings conference call. Today on the call with the management, we have with us Mr. Vidur Gupta, Managing Director, and Mr. Siddharth Agarwal, Whole-Time Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements. These forward-looking statements may involve risk and uncertainties. Also, this is a reminder that this call is being recorded. I would now request the management to detail us about the business, the performance highlights for the year that went by, their growth plans and visions for the business, post which we can open the floor for Q&A. Over to you, Vidur.
Thank you, Vinay. Good evening, everyone. Thank you for joining the call. I would first want to thank all the investors for trusting in us. We've had a great last year. However, as this is our first conference call, I would like to tell everyone more about the business, about what we do. So our core business is HR services, which is broken down into three sub-verticals. We first have the staffing vertical, which we call the general staffing. This is a high volume business, which is further broken down into three sub-verticals, which are flexi staffing, IT staffing, and industrial staffing. So anything that is technology comes into IT staffing, anything floor related comes into industrial staffing, and everything else comes into flexi staffing. In this business, we basically provide manpower to our customers, which is hired on our payrolls and deployed for each customers. This business has been growing well. We've added a good number of people here, and it contributes significantly to our top line and is a very, very high growth business. The second business line that we added in this vertical this year was the apprenticeship program. It's a great business. We were empaneled by the government as third-party aggregators for NAPS, which is the government's flagship apprenticeship program. I'm happy to inform that we added over 6,000 people under the NAPS and NATS program in our first year itself. The second business line as an organization that we have within HR services is the recruitment vertical, which we call permanent recruitment. In the industry jargon, it is also referred to as RPO. In the permanent recruitment business, this is all one-time placement businesses that we pick up from our customers, in which we provide them mid-level to senior level talent, or for which we charge them a one-time placement fee. This jargon has become RPO owing to the fact that recruitment industry is becoming project-based with a lot of customers, where we are now picking up larger projects, and owing to these larger projects, we are able to grow this business in a much better and a bigger manner. The third service line we have is the global HR services business. Under the global HR services business, we first have the US staffing business, which we started in the year 2020. We've been doing well. The business has grown over 100% last year, and luckily we've not been affected by the downturn in the US or any industry there, and we continue to add to that business. The second business line is the global HR services, where we are working with top-notch Indian companies to help them hire talent overseas. So there may be a pharma customer which is hiring their country manager in Latin America. We will find a locally available person with similar experience who can help them add on to their business or fulfill whatever requirement they have. Similarly, we may be working with an Indian company which has a manufacturing setup somewhere in Europe and may be able to get them, say, a plant head or any other role that they have. Another aspect of this business is repatriation, where if there's someone who's coming up with technologies that are not currently present in India, we help bring foreigners or Indian talent to India to help them set up this business or to run this business for them. Most cases, it's returning Indians that get. Along with this, we've just added another business line, which is for remote HR services. A lot of roles globally have become remote and are well accepted remote. So we are pitching into customers to hire that talent on our payrolls in India, working their hours. This is just a recent vertical where we've been investing. On the overall front, as an organization, our top line last year grew from 483 crores to over 768 crores, which was a 58% year-on-year increase. Our EBITDA grew from 16 crores to 24 crores plus, which was roughly a 50% growth on EBITDA. Margin-wise, it was 3.35%, which came down to 3.17%, which was almost a 20 basis point reduction. This was owing to the fact that the high growth, lower margin businesses grew better than the other service lines. Also, the fact that Q4 saw a slight softening on the recruitment front. In totality, most of our business from the general staffing and the staffing business comes from retail and engineering and banking and financial services. Our dependence on IT and the IT staffing business has been slightly lower. We started focusing on the IT staffing piece only in the year 2020. And as an organization, I think we are very, very well diversified into business segments so that we can provide a stable and a large growth outlook to the organization. I will let Siddharth pick up the rest of the business and take it forward from there. Siddharth, over to you. Siddharth, you're not audible.
I'll just break down the entire revenue into two parts. We are also into export of mobile phones. That business we started in the September of 2021. So I'll just break it up between the core business, which is our HR services, and the export of mobile phone business. So FY22, we had clocked our core business of 379 crores, which we grew to 503 crores for March ending 23, which was almost a 33% increase year on year. The EBITDA percentage wise grew from a 3.91% to a 4.24% year on year. The export of mobile phones, we did 104 crores in FY22, and FY23, the same number was, in comparison, was 264 odd crores. The EBITDA in terms of INR was 1.37 crores in the previous year, FY22, as compared to a 3.01 crores on the 264 crores of top line that we did for the year ending March 23. I'll also be happy to inform that our ROC is constantly above 40 odd% for the last 3 years in a row. Our debt equity ratio has reduced to 0.07. Our receivable days overall as an organization has reduced from 31 to 28 and a half odd days of receivables. One highlight also is that our profits before tax, which was 15.24 crores for FY22, has gone up by 45 odd% to 22.18 crores for March 23. So this is just a brief highlight about the financials. In terms of the manpower that we have been able to deploy with our clients, I would like to inform that FY22, we had 13,000 people on our payrolls overall, which has increased to 22,000 people overall for March 23. The breakup of 22,000 is on the basis that we have around 15,000 6,800 people on the off-roll side, and we have 6,100 people on the NAPS and NATS that we started only last year. Our internal manpower strength increased from 312, which was 312 for the March 22, to 431 people for March 23. So we increased our internal headcount by approximately a 40 odd percent as an organization. Whether you'll have to just, you'll have to take it from me.
Sure. Thanks. Thanks, Vidur. Thanks, Siddharth. We'll now open the floor for Q&A. Anybody who wishes to ask a question may use the option of raise hand, and we will invite you to ask the questions. Manikam Ravichandran, please go ahead.
Yeah, Vidurji, good afternoon.
Good afternoon.
Good evening, yeah. So, the results were expected lines, Vidurji. Congratulations for the good results. I would like to see how going forward, 2023-24, what is the growth expectation? Because I understand the IPO money will be used for various verticals, and especially getting a big contracts which we could not able to do in the past. Could you please elaborate on this and
Right.
how that is going to be used and how we can expect the company going forward?
Right. So, pre-IPO, we had a deficit of say branding as an organization, that we were not a recognized player, while we were very large in the Indian market, but that recognition compared to multinationals was not there. And that money obviously has come in, and our object for the issue has primarily towards working capital. Now we are aiming to maintain a growth rate of over 35% CAGR year on year for the next 3 to 5 years. That is our aim, which in the current scenario and current scheme of things, we feel we'll be able to achieve. Also, I would like to inform that we've invested heavily, or we are investing now in technology to build cutting edge platforms. We do have some technology that we are using, but to give us the right edge over our competition, we are investing in that. And all our business verticals have very, very good seasoned leaders who can help us take all of these fields forward. So that way we are looking to grow at about a 30-35% CAGR year on year for the next 3 to 5 years. That is the plan.
Okay, thank you, Vidurji.
Thank you.
Is there any possibility for announcing the quarterly results from the coming September onwards? I mean September, and then December.
We are looking into that. And as an organization, we would want to move on to a quarterly result as soon as we can. We are putting in the right processes in place so that we can get to that stage. So our regulatory requirement is half yearly, but surely we'll be looking into that.
One final question, Vidurji. The margins are under pressure due to this cell phone business, and how the margin is going to be looked like in 2023 and 24 with this renewed the bigger contracts which you are going to get on the supply of workers, or those kind of things. How you expect the margin going to grow for the coming year?
Sir, our focus is not very high on the mobile phone or the exports business as an organization. Our focus is on our core business of HR services. The margins that we are currently maintaining are actually very competitive, and we are hoping to be able to keep up a similar margin percentage However, there may be some softening owing to the fact that we are investing heavily. So we've added quite a few people at our back end so that we can take on the larger contracts. Also, we've built sales teams, which, so in the general staffing business, we are looking to grow the industrial staffing piece, which is a slightly higher margin business than our regular staffing businesses. And for which we've built in sales teams at different industrial towns, across the country. And that investment, so someone is not on mute, there's a lot of disturbance. 1 minute.
Continue with it. I have done it.
Sorry. So these industrial towns are going to be helping us keep the margins in place. Our recruitment business has some dependency on technology, which has been extremely soft the last quarter and this quarter as well. However, in the longer run, over the year, we are expecting that we should be able to make up for the margin, and our end aim is to keep the margin in similar ranges as it is today. There may be a little bit drop, but everything will be in line with the industry, sir.
Thanks, Manikam. We'll take the next question from Pradeep Agarwal. Pradeep, you can unmute and ask your questions.
Good afternoon, sir. My first question is basically what is deferred tax, which is referred in deferred tax, basically what is it due to? This is 7 crore, basically first time appearing so much amount.
All right. And what is the second question, sir? If it is related, we'll answer both together.
The second question is basically 30-35% CAGR growth, which you told. Is it on the absolute revenue numbers which we are having, or it is just for the HR services revenue number? Because the mobile export business, you told that you will be shutting it off.
So Pradeep ji, first I'll answer your second question. The 30-35% CAGR growth is for the HR services. We do not, we are slowly going to be looking, or our concentration is actually on the HR services business. The electronics business is a good return on capital business. And we conceptualized, or we figured out this business when COVID had hit and we had surplus working capital available to be deployed. So the 30-35% CAGR is for the HR services. The second question with regards to the deferred tax, I'll let Siddharth take over that.
Yeah. So Pradeep, what happens is that we avail a benefit in the income tax, which is by the name of 80JJAA. We have a carried over benefit, which earlier, due to not a lot of manpower on our payrolls, it wasn't utilized 100%. Over the last 2 years, we have been able to now utilize 100% of that particular benefit, owing to which this deferred tax has come into play, and this has been shown in our balance sheet for the current year. For the previous year.
Okay, so will it be basically like the deferred tax was negative this year? Will it be positive in the next year?
No, so Pradeep, this is a benefit with respect to generation of employment, which the government allows all organizations across the board. Owing to which, if we continue growing in the same way, this deferred tax would always show in our balance sheet going in the coming years as well.
Okay, and how will we take benefit of it? Anytime?
No,
so Pradeep,
yeah.
I'm sorry.
Yeah.
So Pradeep ji, Siddharth, you go ahead. I'm sorry.
Yeah. So Pradeep ji, what happens is we as an organization, we are able to claim additional 30% of expenditure on the salaries that we pay to people who are below a 25,000 rupee compensation. I am not slightly aware of the entire how the calculation happens, but on a broad level, it's 25,000 rupees. So we as an organization are taking that particular benefit. Since the benefit is being availed 100%, so the deferred taxation has come into play.
So Pradeep ji, just to answer your question further, this is a recurring benefit. So, this benefit takes into account the expenses made for So the current year expense will be available to me for 3 years and at 30% in the current year, 30% next year, 30% the year after that. Owing to that, this benefit is available to us till the time the section is available. However, it has come into our books this time because this is the first time we've been able to exhaust that benefit and fully claim it. So we have visibility that this much of deferred tax will get utilized in the coming year.
Okay. And one more question, sir. In the 9-month balance sheet, there was around 20 CR of EBITDA, and now basically we have around 23, 24 CR of EBITDA. So why it is softened so much in the last quarter? And the secondly, it looks like the consolidated and standalone basically revenues or EBITDA is almost equal. So did we basically not had good basically business from overseas or global our subsidiary in the last quarter?
For the US, it's actually a very, very small amount if you look at it. So we added a couple of people there, and that in itself makes a difference to that profitability on a quarter basis, if you look at it. However, when you look at the overall softening of profitability for Q4, that impact has come out of two reasons. One is that the IT and the permanent recruitment market has slowed down. It's not just slowed down for us, it's slowed down for everyone. And there have been a lot of layoffs. I'm sure you've been hearing of the layoffs from October and November. And the recruitment business, what happens is that the work that we do in a particular quarter, the results from that work, because of the notice period and the interview process and everything, will happen over the coming quarter. So that impact is basically largely one because of the overall investment that we've been doing as an organization, preparing for our next level of growth. We've had a lot of good talent that is available in the market. And second, there's been a softening on the recruitment business per se. If you look at the overall top line, that top line has grown. So that impact is because of these two reasons. One is preparing for the growth where we've hired a lot of people. Second is the softening. And our business runs on internal manpower. And as an organization, we feel that this is a great time to be getting the right kind of people to help us grow. So that is the reason.
Okay, and this financial year, we can basically, so will we be seeing so much softening, or basically it will be normal?
So Pradeep ji, if you look at the past trends, whenever there are layoffs, the hiring is always more than that. And whenever it opens up in a big way, and we are able to recover everything. So that way we are expecting that in the coming quarter things are starting to move up. Things have already started to move up. As a matter of fact, I'm sure we are not hearing of the layoffs anymore. We are now in the US also with the interest rates more or less stabilizing. People are accepting that this is how it is, and this is the environment that we need to grow in. Also with Europe, there was a larger impact earlier, but now with Europe also is everything is moving to a slightly more stable positioning. So that is the situation.
Okay, thank you, sir, for answering my questions. I will join the queue.
Thanks, Pradeep. We'll take the next question from Shikhar Mundra. Please go ahead.
Hi, sir. Hello.
Yeah, Shikhar, go ahead.
Yeah. So what are the utilizations? And I want to understand the unit economics. Like, what's the charge we pay per employee, and how much do we charge our customers? And what would you say is our utilization levels?
Shikhar ji, if you could please repeat the question. I didn't understand what utilization means. Yeah.
So for our business model is we have some employees on our payroll, and then we deploy them to the customers and we charge our customers, right? So, I mean, those employees are on a permanent payroll, right? And
All right. So now I understand. So, see, we hire employees only when, only after the customer interviews them for deployment. So there's no non-utilization of employees. We don't maintain a bench of employees. Our per unit mechanics are different according to various verticals. So general staffing is slightly low margin. IT staffing is slightly high margin. Industrial staffing is mid margin. But then there are some of these areas which are business critical, to be saying out the exact margin, which is why I can't for the competitiveness of the business.
all right, got it. So the value we add is for the customer is we are finding a client base and employee base for the customer.
So Shikharji, all the three businesses, all of our businesses have a different value add. In the general staffing business, this is all a very high employee turnover business. So when we have, say, a BPO resource or an engineering shop floor resource or a retail resource employee, these people quit or move jobs very, very frequently. And they need to be re-employed or new employment needs to be done again and again. Fulfillment of those roles needs to be done. So that is our largest value add. And we are very, very, very strong. We started as a recruitment agency. So recruitment is in our DNA. Finding people is the key skill that is required for anything. See, today, compliance wise, we are 100%. We can't be 101. So when I spoke about technology that we are investing in technology to give our employees and our customers a world-class experience. So currently also all our employees have an mobile application where we can onboard employees, we can take their attendance through the application. We have geo-fencing, we have geo-tagging. Our application, we can sync it to a sales tool for our customer to understand how is the particular employee performing. For the employee, he or she can access payslips, ESIC details, and other details right on the application. Now we are looking at taking this experience to the next level. So these are the differentiators that will always remain, but the largest differentiator will always be the recruitment capability of an agency, which is very, very, very strong with us.
Okay, got it. And what was the amount raised in the IPO and how do we plan to use it?
So the overall IPO was about 105 crores. And this included an OFS portion as well. However, for the fundraise for the organization, a little somewhere in the range of 90% is towards working capital. So this is only going to be whenever we get contracts, we need to have or we need to pay upfront. And our focus going forward is industrial staffing and technology staff. Both of these are credit-based businesses.
All right. So what's the economics like? So let's say if we get a contract for, let's say, 10 crores, how much do we pay upfront and how does it work?
So if we get a contract for 10 crores, it'll be 10 crores a month. I'm guessing. So then we pay the 10 crores upfront. And we raise an invoice to the customer. We pay that 10 crores and we pay the GST. We raise an invoice to the customer and next month the customer will pay us. So a certain percentage of our business currently we have a mix. I think Siddharth will be able to explain.
Yeah, so we operate at almost 50 odd percent, where 50% of our accounts happen to be collect and pay. And the remaining 50% happen to be pay and collect. By pay and collect, we mean that we have to pay the employees first, raise the invoice, and as per the credit terms with our customers, the money is remitted to us. Whereas on the collect and pay model, obviously it will be slightly lower towards the margins, but the customers pay us upfront, and the money is then is given to the employees, and that's how the maths works.
Okay, got it. And so 22,000 employees last FY financial year. So what's the plan for the next 3 years, though? Like, what's the plan for this year, and what's our target for the next 3 years, number of employees?
So like Vidur mentioned, Shikhar, we are planning to grow on a yearly basis at least a 30-odd%. So that should take our employee headcount to approximately 40-odd thousand over the next 3 years, 3.5 odd years.
All right, got it. And coming to the smartphone business, so I mean, what do we do exactly? We export to which all countries, and what's our model over there?
So here, Shikhar, we are only primarily exporting the mobile phones to the UAE market. It's a well-defined process, and it's a very large industry now overall. As India is moving towards a lot of Make in India initiatives that the government has taken, and with the PLI benefit that is being provided to the manufacturers, India has now become the hub for this activity. And so our procurement happens through the dealer network, and then these goods are shipped via air cargo to UAE, and the payments are remitted to us. And so it's a 7 to 10 day cycle that we run. Hence, the return on capital employed is high.
Okay, got it. Okay, thank you.
Yeah, thanks, Shikhar.
Thanks, Shikhar. We'll take the next question from Vivek Jain. You can unmute and ask your question, Vivek.
Yeah. Hello. Yes. So my first question is as you mentioned, the working capital for which you raised the IPO will be utilized mostly in the salaries that you will be paying to your employees, right? And then you will be billing those salary to the customer. So is there any other working capital requirement apart from the advance salaries that you are going to pay?
Vivek, it is primarily towards this.
Okay.
See, in our recruitment business, so the working capital requirement is slightly different. We hire people who recruit us, and they take about 5 to 6 months to become productive. So we'll be hiring a few people there, but of the capital being raised is going to be utilized towards salaries only. That is our largest working capital requirement.
Okay. So don't you think that there would be a less ROC in this model, because first you will be paying the salary and then you will be billing the customers. So are all the resourcing or manpower companies operate like this, or they first bill the customer and then pay the salaries?
So Vivekji, there are 3 models here. One is a model where the customer pays you upfront, and then you pay the salary, which is extremely low margin. The second is where we pay upfront, we charge the customer, and in IT staffing, the customers usually pay us in about 45 days, not even 1 month. It is higher. But if you look at the ROC standpoint, it is a phenomenal ROC business. See, because a lot of customers usually look for margin percentage, or a lot of investors look at margin percentage on sales. Now, in our business, sales are happening, or the same capital is being deployed 12 times over in the year. So if there is a certain margin percentage that we have, and that capital is being deployed 12 times over. So obviously the return on capital becomes very, very good. So, and there'll always be a ratio. So while the industry has collect and pay also, it has pay and collect also. Both the businesses are there, they are coexisting, but we are seeing a shift towards credit in the industry. Second, with Make in India, with all the government initiatives towards the manufacturing sector, we are seeing a lot of growth coming in manufacturing, and industrial staffing is all on credit. Industrial staffing is 100%. So every industry has its own way of working. So industrial staffing functions on credit. So we need to have money to be able to do that.
Okay. So my second question is with regards to your phone import business. So see, the HR services and the electronics import is completely two different segments, right? And there don't seem to be any synergy between them. So like, how and why did you decided to go in this venture? And will this have any effect in case, like, if you are growing up and 3 or 5 years down the line, if you are attracting institutional investors, then does it make sense to segregate that business out of the HR services business?
So Vivekji, we started this business, or we conceptualized this business during COVID, when we were not getting new business, and we had funds available with us, and that is when the thought of this came about. However, it does help us managing our cash flows better. We raise invoices to our customers wherever we are providing HR services, and as we raise the invoice, on the 20th, we have to pay the taxes to the government on the same. And these taxes, along with whenever we are purchasing the mobile phones, we need to pay the GST to our vendors. So it helps the HR business positively in terms of utilizing that same amount of money which I would have paid to the government.
Mm-hmm.
And had we been doing only the electronics business, then we would have first paid to the government and then taken a refund. So it's just pure play economics, and on a longer term focus, our focus is not on the electronics business. Our focus now is on the HR business, and we feel that there is a great amount of scope in the HR business, in our core business. So we plan to concentrate on that, and as and when the opportunities are there to keep investing more and more money in the HR business, we keep doing that. And there's no focus on the electronics business, is all I can say.
Okay. Thank you.
Thank you, Mustafa. Oh, sorry. That was Vivek, right? We'll take the question from Imran Khan.
Hi, thanks for the opportunity, and good evening to all. So my question is on your revenue, guidance that you have just given. Given that you're a very small player in the industry, and if you look at the other, listed companies like TeamLease and the other one, they are very, very large in terms of revenues. So, what is that one thing that you think will give advantage to you, and then you will be able to grow so high at a high growth rate, when there are such a big players already available in the market?
So, Imran, if you look at India, we're the most populous nation in the world. And we, for some reason, on the main board, we only have 2 large listed HR services companies. If you look at the essence of competition in India, we are not really competing against each other today. There is a lot of unorganized, smaller players in the market. So if you look at the growth rate that has been achieved by our competition and the larger players, they also have a decent growth rate. The reason they've been able to maintain this growth rate is that there is formalization happening. If you look at all government policies, they're all aimed towards formalization. So there is a lot of space for a new vendor, for a new agency. And that's the biggest reason that we are confident that we'll be able to grow at a good pace. Also, at the same time, we have a great team. Our strength is recruitment, which can't be quantified, unfortunately, but that is our strength, and we've been doing very, very well, owing to which we are getting good contracts. So we'll be able to compete. Competition is not a problem. And another thing is technology. So technology is available with the larger players and with us, but there are a lot of players, the smaller ones don't have technology. So the differentiating factors that are already in place. So the market is very, very, very large. The formal contract staffing penetration in India is around 1%.
Right.
So that way it's a huge market. Very, very, very large.
Right. And, when you grow, let's say in the next 2-3 years, you double your revenues. do you also expect your working capital days to increase? Because, I was just wondering, to grow fast, maybe you're not compromising on working capital days, right?
So, Imran, all of our customers are large enterprises. And if you look at our books, there's a negligible amount of bad debt. So we are very, very careful on choosing our customers. And at the same time, all of our customers will have 2 or 3 vendors working on a similar term. So the working capital will increase overall, not in terms of number of days, but in terms of the amount. Now, also, we don't have a strong or we don't have a large IT staffing practice as of now. That is where we are doing a lot of focus, in which the working capital is 45 days. So that way it may increase a little over there, but that's a fairly high margin business. In the industrial staffing front, it is 30 days. So that way we don't see a strain on capital owing to the fact that our sales outstanding days will.
Right. And then the subsequent question to this is, going back to your DRHP, you have given projections for your working capital as well, which is going from 60 crore or to, I think 135 crores in the next 2 years. So if, the days are not increasing and then you're growing your working capital by 2.5x, shouldn't your revenue also grow in that fashion?
So, Imran, there are 2 things. One, the collect and pay business from the market is reducing. The whole market is transitioning slowly towards more and more pay and collect, even the larger customers. Second, a lot of our revenue at the moment is coming from collect and pay businesses. Our focus is on industrial staffing and IT staffing. IT staffing, some places, the credit also goes to 3 months. So when we say that DSOs will be in similar ranges, we are accounted for some business that will come to us as a pay and collect. Otherwise, the DSO will go up.
Right. And does it impact your margin when you move from the one, business to another?
So the regular general staffing business is a low margin business. Industrial staffing is slightly higher, and IT staffing is a fairly high margin business. But all of these businesses have their own nuances. In IT staffing, we get PO per person. So every person that we hire, we'll get a fresh PO. In the industrial staffing and in general staffing, we're usually talking to customers in multiples of 50.
So my question was a little different. What I was trying to understand is, when you move from, collect and pay to all of a sudden pay and collect, would it have any impact on your margins? So that was my question.
So whenever we are moving to a pay and collect from a collect and pay, we obviously account for the amount of credit that is being given to customers.
So then your margin should
the margin goes up. The margin goes up, but then at the same time, if we want to be rightly competitive in the market, Imran, we'll have to invest a fair amount of money on technology and organizing ourselves to be in the big leagues. We cannot be handling 50,000 or 100,000 people with the same technology that we are handling this number with today. It won't take the load.
Right. And just one last question, if I may. Your business from the non-core part, which is, trading of the electronics, is about 260 odd crore rupees. How much absolute money have you had put in the working capital here?
I don't have that number handy with me.
It's roughly a 20-21% return on capital, Imran.
All right. And just one suggestion, before I give chance to others. See, you're a very small company right now. I have been looking at the exchange filings, and I just got to know that you have met 2, firms in the last maybe 8 or 10 days, which is, after the closing of way beyond March quarter, and then, closely, near the first quarter. So I would, suggest to not that thing in the future? Because, it gives a bad impression, because we don't know, because you're not doing a, public call and you're talking to a close group of people. So, sometimes it gives a, impression that you might share some sensitive information. So I would just, consult with your,
Imran, I'll take that query.
Yes.
I'll take that query. So as per SEBI regulations, we do not discuss any data that is not in the public domain, including what we have done in terms of numbers. We only discuss in terms of explaining business to people.
No, I get it, but I'm only talking about the timing of the, the discussion. It should not be after the closing of the quarter. It should be before that. I am sure you know about the, this thing, where, you have a silent period, right? So please read about it. I think it will help.
Point well taken. We'll try to make the best use of that, in the coming quarters.
Thank you.
Yeah. Before we go to the next participant, we'll take the next question from, there's a question in the chat box, from Mr. Abhay Dambe. In many states of India, in government sector, there is newly introduced policy for placement of employees on a contractual basis. It's actually a big opportunity as there is big requirement of employees, and this requirement is going to increase day by day. My question is, as a company, are you going to look into this sector in future to check the opportunity?
So we are already working closely with the government on NAPS and NATs. I think the overall from government, we are seeing a very, very large push towards employment, which is likely to help us greatly. And whatever policies are there from the government, and whatever new opportunities, we look at them closely. If it makes sense to us business-wise, then we'll definitely be jumping into it.
Sure. We'll take the next question from Akshada Deo.
Hello. Hi. Am I audible?
Yes, Akshada.
Okay. Hi. Yeah, I just wanted to know how many number of clients do you have at the moment?
We have over 275 clients, actually.
Okay. And how many of them have been repeat for you and how many have been new business this year? And if you can give the previous year's number.
I don't have that data handy with me on repeat and so we haven't lost out on customers, Akshada, if that is what you mean.
No, I just wanted to know repeat, but that's okay. But you mean that there has been no attrition of clients?
So in the staffing business, attrition of clients hasn't happened. Even if a customer is getting an option from another agency with a better pricing, we are able to match it. So I don't think we've lost out on any major customer in the last 1 year. Have we, Siddharth?
Akshata, I'll just add one more thing to what Vidura said. Over the last 3.5 or 4 years, we haven't lost our top 10 customers. So they continue to remain with us. We have been growing on in terms of the association that we have with them over the last 4 years now.
Okay. Do you have your growth rate for the number of customers for the last 2 to 3 years?
So
we don't have that handy with us, Akshata.
Okay. Okay. Not a problem.
So actually, I'll tell you why we don't have that. We can have a customer which gives us a very, very large amount of business, and at the same time, a very large multinational giving us a very small amount of business. So for us internally, the larger tracking is the overall revenue that we are being able to generate, vertical wise or business wise internally.
Right.
So that's why. Okay.
And so there are a lot of companies which are specialty niche HR hires as well, like during of America, who have also raised quite large series A, B, C, E rounds. And similar companies are also available here, especially for the remote and IT services. Would you say they are your direct competitors as well?
In a sense of things, they are. They are competitors as well. They are customers as well. See, technology is a very evolved ecosystem. Now everyone understands there is a time that's taken to get people on board. So when I said that we've not been maintaining a bench, or we don't usually maintain a bench, what I mean is that because our recruitment capability, where we can provide talent that can join immediately, is a very big differentiating factor.
So how long will it take, actually?
See, it depends on the skill, but there are skills that where we are able to get people to join within 8 to 10 days. We have teams that focus on finding immediate joiners. So owing to which we are able to get that talent as well. But to answer your questions, that are we competing with the IT services companies and the IT firms? Single answer would be in a way, yes, we are competing, but they are customers as well.
Okay. So I know that you've already explained, but can you still explain the tax outflow, the deferred tax that you've had this year, and also on the free cash flows? Cash flow. I can see that there was a tax outflow of 13 lakhs that you paid as well.
So if you're referring to the consolidated financials, so there is one tax flow that's happened in the US. And then there is a tax flow that's happened in India as well, because we ran out of our entitlement. So 80JJAA, as the section says, the crux of the section is that the government wants you to hire new talent, and they take into account the number of people on your payrolls as of 31st of March, year on year. So, I am allowed to claim an additional 30% of salary that's paid to employees who I have hired in the current year over the previous year. So say my headcount was 100 people last year, and this year it's become 110. Out of those 10 people, whichever people have completed over 240 days and are below 25,000 rupees of salary, and are being paid in the bank account every month with all statutory contributions, I am allowed to claim 30% of the gross emoluments paid to them as additional expense for the current year, 30% for the coming year, and 30% for the year after. So that is how this deduction gets made. At the same time, whichever employees haven't completed 240 days in the current year, if they complete 240 days in the next year, then I get that entitlement for the next year, the year after, and the year after that. So it's a 3-year rolling clause in the section, and we hadn't taken this earlier because we were never able to claim the 100% entitlement, and this year we've been able to claim the 100% entitlement on 80JAA. And that's why there is a certain amount of tax that is there.
Okay. So
and this is also largely, I'm sorry. So just to complete, this is also largely because of the COVID year. We had a slight drop in the headcount, and we were, and because those numbers weren't added in that year, which is why the entitlement was slightly reduced.
Okay. So till the government has kept this provisioning open, you will be able to claim the 30% reduction rolling.
Yes, and this clause is a fairly old clause. So it was earlier only applicable to leather and textile. And I think in 2017 or 2018, one of these years, the government opened it up to all sectors.
Okay. And I just wanted to know, you've given a bifurcation of your 22,000 payroll. Can you just tell me what was the bifurcation again?
Yes. So
Akshada, it's around 16,000 people of role that we have, and 6,000 people on our apprenticeship program, which is the MAPS and the NAT scheme. So in total, it's 22,000.
Okay, so 16,000 is general staffing and other employees. Okay, thank you. Yeah, that's all from my side.
Thanks, Akshada. We'll take the next question from Pradeep Agarwal. You can unmute.
Thank you, sir.
Thank you, Pradeep ji, for moving back in the queue after your question.
Yes. Thank you, sir. So my first question was 10% of IPO amount was for IT staffing acquisition, company acquisition. So what is the timeline we are looking for it?
Sir, in our RHP, we reduced the amount of acquisition to 1.5 crores.
Okay.
So this is only because we want to acquire technology, and we have been talking to various companies, and we've been looking at new products to acquire. So we are looking at the right piece to be acquiring, which we should be able to do in the next year or so. Within the next 1 year is when we are targeting.
Okay.
But it's only 1.5 crores.
Okay. And the
Rest of it will be from our internal accruals.
Yes. And next question is the team leads or other Quest Corp, these established players, they basically are having margin of around 2%, and you are having margin of 4%. So why is such difference coming?
Sir, Quest has a larger margin. Teamlease, I think Teamlease has a lower margin. So Quest has a larger margin because we are in similar lines as Quest. So we have a US business, we have the recruitment business, we have the contract staff business.
Okay.
Whereas Teamlease largely concentrates more on the contract staff.
Okay. And there was some one-time loss basically to Teamlease due to this EPF issue or something like that. So do we also basically can face?
We don't have that. No, we can't.
Okay. Okay. Sure. Thank you. Thank you, sir.
But largely, I think we are competitive with everyone.
Okay. Sure. Sure. Thank you, sir.
We'll take the last set of questions from the participants who have raised their hands from Manish. Manish, you can unmute and ask a question.
Good evening, Vidur. I think in the India capex cycle is now picking up, and I'm not sure whether your staffing IT must be in the white collar job, but in the industrial you must be supplying on the blue collar job. And lot of because of the China plus one policy, a lot of manufacturing units are coming up in India. So are you in the blue collar job also, and what's your plan to go into the blue collar job, supplying the manpower in the blue collar job? Because it will be in mass, basically the number of employees will be required in more in the blue collar job, and you can have the better revenues there and better margins.
So great you brought up this question. So Manish, when we are referring to industrial staffing, it is all blue and grey collar.
Okay.
So this is what we were referring to. This is where volumes will come, and this is where the India story is for the next 8 to 10 years.
And do you think that you have the right tools in terms of digitalization, or maybe looking at future in the artificial intelligence to compete with your bigger players in the market, or do you need to upgrade it, or do you have any vision for that? What is your vision to be at par with your competitors in terms of the digitalization tools, technology?
So we are investing in tools and technology. As I had mentioned earlier, that we already started on our journey on technology, and we plan to build in the right amount of artificial intelligence and business intelligence to help us grow. These will be the factors that will set the organized players apart from the non-organized players.
Okay, thanks. Yeah, thanks, Vidur.
We have certain questions in the chat. I'll quickly ask you those. The first question is from Gaurav Sajdev. Could you please tell again the bifurcation of mobile revenue and staffing business in FY23?
So staffing revenues, so HR core services was 503 crores, and the mobile export business was 264 crores, totaling to 768 crores overall.
Okay. There is a question from MK. Is the deferred tax never payable by the company? Is it deferred in the sense that it's payable later, or that it's never payable by the company?
It'll be adjusted in the future.
So it is adjusted from future taxability. Whichever deferred tax we've taken here, whenever we have tax next year, this much deferred tax will get reduced from the tax. So we won't actually have to pay tax.
Here's another question, though I'm not clear about it, is you claim 30% per year. What if staffing count drops in a financial year compared to previous financial year? Can you still claim the balance 30% that are eligible for the next 2 years?
Yes, we can. The entitlement remains for the 3 years. So in case of a headcount drop, the last year's entitlement, which will be the current year for that particular year, will not be possible. For the remaining 2 years, we'll be able to claim the amount.
There is a question from Manjunath Maruti. Is there any plan for trading of mobile phones into new geographies?
Not at this point of time. We would not be concentrating on this business overall. We wish to have the volumes at the same level that they are at currently.
In follow-up to this, Mustafa has a question. One more question would be the future of electronic business. If the margin is good there and you say you will not be interested, would not that impact your profit growth or your profit?
So the mobile business has contributed to only 3 crores out of the profit last year. So it's not a large sum in terms of contribution.
Sure. I think that's the end of the questions in the chat. Vidur, I would request, or Siddharth, both of you, any of you, if you could give any closing comments for participants.
So thank you everyone for being here. I think it was a good session. We are hoping to have a great year ahead of us. Thank you.
Thanks a lot. Thanks a lot to the management, and thank you to all the participants for joining on this call. Thank you so much.
Thank you, Vikram.
The recording has stopped.